Hi again, this is Rick with AmazingAccuracy.com, and today is December 21st, 2011. It is currently 11:22 a.m. Chicago time. We are today looking at the Lean Hogs market, and the chart you see before you here is the weekly chart of Lean Hogs. Here's what I want to share with you today on Lean Hogs. If you will take a look at this price bar right here, that was last week. That's week ending December 16th, with the 16th, of course, being Friday, as each one of these price bars are represented by the date of Friday to represent the whole complete trading week on a weekly chart. If you'll look here, the low that was made at 82.625 is sitting on calculated support based on several different methods of calculation, and that is what I'm going to share with you today. First off, by taking the range from the low made during week ending May 27th, 74.825, to the high that is at 94.975, you can see right there, that was made on the week ending October 21st, and you were to come down, let's see what percentage that would be. Let me get rid of the other stuff that I have here. All right. As you can see, it just nailed 62% Fibonacci support. That whole move down here is 62% of the weekly move from the end of May up here to nearly the end of October. 62%. On top of that, we have from the low of week ending September 9th to that same top of week ending October 21st. As you can see here, now it's doubled up, so it makes it hard to see. I'm going to get rid of the other one. You can see here it was the extreme Fibonacci ratio of 89%. All right, and it nailed that. Let me get rid of that as well. All right. Also, you see these fan lines here, these colorful lines. These are Fibonacci fan lines, and we call them dynamic Fibonacci levels because as each week goes from left to right, these lines change value because they are sloping either down or up. In this case, they all slope down. That means their values go lower each and every week. You can see here the low of week ending 11/11 found support on one of these lines. And if you'll notice here, the 50% line, that's the blue line in the middle here, 50%, based on this V that you see here of the top of August 5th to the low of September 9th, that's the week of, these are all week of dates, and to the top of week of 10/21. You can see that for the week of December 16th, which was last week, it has hit 50%. Now, of course, this week, being week ending December 23rd, it can go lower because the line just keeps going down, if you can just imagine it going down like this. However, those Fibonacci lines that I had already shown you, which we refer to as static support and resistance lines, let me put those back, they do not change. They stay at their levels from left to right. So only last week, in this case, would apply to the static as well as the dynamic, have all come together last week's low. Now, so far this week, that low is holding, and there's a good chance that it will hold. But here it is. This is the daily chart of Lean Hogs, and as you can see, there is that low of last week sitting there, and there is the low so far today, which is sitting at 83.27.5. Okay, so it has not quite made it down to make a lower low. And the expectation, of course, is that this would hold based on all those support levels we looked at on the weekly chart. It might not. It held last week, so they did its job last week. But we want to keep an eye on this nonetheless, because the potential is very strong here that it is time for Lean Hogs to make a bottom and start moving up. And again, we're looking at the weekly chart. That is what we're expecting here. Now, whether that low is actually last week or it goes a little lower this week, the important thing is, and I don't care which one of these weeks becomes the low. I'm expecting last week because of all this evidence I just showed you, but I don't care. It could go lower for all I care because I expect bottom here anyway, here or here. I don't care. I am bullish Lean Hogs as we get out of this holiday week into the following weeks, at least the following week or two, because I expect this to be a 1 or 2 week rally at the very least, which is good for a short-term trade. And that's all I'm looking at right now, is a potential short-term trade. Looking at the oscillator for the weekly Lean Hogs chart, the stochastic is oversold. The MACD is not yet. So the thing is that I don't look at this being, necessarily a major bottom. It could be just as significant as this bottom was. But that's when I plan my trades, I look at the short term first, and if it turns into a long term by extension, wonderful. Okay. Another thing I wanted to bring up here is fixed cycles. Now, I don't usually do a lot with fixed cycles. I deal more with dynamic cycles. But fixed cycles is where you would find the time spacing between two significant points, usually bottoms, and then you would expect future bottoms to occur somewhere around that. So if I was to take this bottom here of week ending May 27th and extend it out to that bottom there, that I don't have the date here. Let's see what that date here. Whoops, I went too far, didn't I? Let me do that over again. Okay, it's right here, 9/9. Okay, so let me put that tool back on. So if I went there to 9/9, take a look at where, now this is a 15-week cycle here, fixed cycle. Look where the next 15-week ends. If it's to be exact, it would be this week. If it's a little early, it would have been last week. If it's late, next week. Either way, it's in this neighborhood. And that's all I care about. We could get another one of these nice moves coming off of these bottoms. These last two bottoms resulted in very nice moves up. However, again, I'm only concerned about a week or two because I'm trading off the daily chart, as I had already stated. All right, going back to the daily chart, just to conclude here, looking at this thing, currently today's low is sitting at time price support, but it's just a minor support. And by extension, today and tomorrow is also a time period for a turn. As a matter of fact, if I put my F-date indicator, you can see there was the bottom top here, and it's going down from this one. And you can see now we're entering into the next short-term turn period, which is tomorrow. So today, tomorrow is a good time, in my opinion, to start looking to go long in the Lean Hogs. Now, you don't just necessarily jump in. The way I would approach this, if you want to be sure that you're not getting in too early, is to wait for a breakout of this downward trend line that you see here. If either today or tomorrow prices start to trade above this line, that would be a signal to start going along this market. On this daily chart, both the stochastic is oversold, MACD is oversold, and both are now turning up and ready to go up. The short-term cycle analysis I've done on this market also indicates that as of today and tomorrow, this market is ready to rally up. So that is my forecast for the Lean Hogs market for today, December 21st. And may you profit well. Please subscribe to my YouTube channel if you haven't done so already. And I have a free newsletter. Go to my website at amazingaccuracy.com. Please sign up and stay in touch. Thank you for watching.